Have you ever noticed how the wealthiest people rarely talk about money in public, yet they seem to understand it better than anyone else? There's a reason for that. The truly wealthy guard certain financial principles like ancient secrets, not because they want to hoard knowledge, but because they know that money operates on rules most people never learn. Today, we're going to break that silence. We're going to explore the financial truths that can reshape your entire relationship with wealth. The same principles that have quietly built empires while the rest of the world chases the next get-rich-quick scheme. Let me tell you something that might sound strange at first. Money is not actually about money. I know that sounds contradictional, but stay with me here. Think about it like this. When you look at a tree, what you see above ground, the trunk, the branches, the leaves, that's just half the story. The real power of that tree lies beneath the surface, in the roots you cannot see. The root system determines whether that tree will stand strong through storms or topple over at the first sign of trouble. Money works exactly the same way. What most people focus on, the salary, the car, the house, the visible signs of wealth, those are just the branches. The real foundation of wealth is built on principles, habits, and decisions that happen quietly, away from public view. This is the first secret that changes everything. Wealth is not built in the spotlight, it's built in the silence. Every single day, you make dozens of financial decisions that seem small and insignificant. You buy coffee without thinking. You subscribe to services you barely use. You avoid that uncomfortable conversation about your spending habits. These tiny choices, invisible to everyone around you, are the roots of your financial tree. And here's the brutal truth. Most people are watering the wrong roots. They're focused on looking wealthy rather than becoming wealthy. They buy things they don't need with money they don't have to impress people they don't even like. And then they wonder why financial freedom feels impossible. Let me give you a real example that illustrates this perfectly. Imagine two friends, both earning $70,000 a year. The first friend drives a brand new luxury car, lives in an expensive apartment, and always has the latest gadgets. The second friend drives a reliable used car, lives modestly, and seems almost boring by comparison. Fast forward 20 years. The first friend is still working, still stressed about bills, still one emergency away from financial disaster. The second friend has built a portfolio of investments, owns property, and has the freedom to work because they want to, not because they have to. What made the difference? It was not luck. It was not a secret inheritance. It was the daily decision to prioritize invisible wealth over visible status. This brings us to a concept that most people completely misunderstand: delayed gratification. Now, I know those words sound academic and lifeless, but let me reframe it in a way that actually matters to your life. Delayed gratification is simply the ability to say no to what feels good right now in exchange for something better later. It's the financial equivalent of planting seeds instead of eating them. Every dollar you spend today is a dollar that cannot grow for you tomorrow. Every dollar you invest is a seed that can multiply into 10, 20, or even $100 over time. The wealthy understand this at a deep, almost instinctive level. They view money not as something to spend, but as something to deploy. They ask themselves a different question. It's not, can I afford this? It's, what will this money become if I invest it instead? Here's where it gets really interesting. The math of compound growth is so powerful that it almost feels like magic, but it's not magic. It's just patience meeting principle. If you invest just $500 a month, starting at age 25, and you earn an average return of 8% per year, by the time you're 65, you'll have over $1.7 million. But here's the catch. Most people never start. They tell themselves they'll invest later, when they have more money, when things settle down, when life gets easier. But later never comes, and the cost of waiting is enormous. If you wait just 10 years, until age 35, to start investing that same $500 per month, you'll end up with only around $750,000. You waited a decade, and it cost you nearly $1 million. That's the invisible price of delay. Now, let me share something that might make you uncomfortable, but it needs to be said. Your financial future is not determined by how much you earn. It is determined by how much you keep and what you do with what you keep. I have seen people making $40,000 a year build more wealth than people making $200,000 a year. How is that possible? Because income is just one variable in the equation. The wealthy understand that there are three forces constantly at work in your financial life: what comes in, what goes out, and what multiplies. Most people obsess over the first one. They believe that a bigger salary will solve all their problems. But then something strange happens. They get the raise they were dreaming about, and within 6 months, they are just as broke as before, maybe even more broke. Why? Because their spending rose to match their income. This is called lifestyle inflation, and it is one of the silent killers of wealth. Think of lifestyle inflation like a shadow that grows with you. The more you earn, the bigger your shadow becomes. You start to justify purchases you would have never considered before. You upgrade your apartment because you deserve it. You lease a nicer car because you have worked hard. You dine out more often because you can afford it now. Each decision feels reasonable in isolation, but together they form a trap. You end up on what I call the hamster wheel of income. You run faster and faster, earning more and more, but you never actually get ahead. You are stuck in the same place, just with nicer stuff around you. The second secret the wealthy guard closely is this: live below your means, not at your means, and certainly not above your means. This does not mean living a life of deprivation or misery. It means being intentional about where your money goes. It means creating a gap between what you earn and what you spend, and then protecting that gap like your life depends on it. Because in a very real sense, your future life does depend on it. That gap is your freedom fund. That gap is what transforms you from someone who works for money into someone whose money works for them. Let me tell you about a principle that completely changed my understanding of wealth. It is called paying yourself first. Most people handle their money backwards. They pay their bills, buy what they want, and then if there is anything left over, maybe they save it. But there is never anything left over. There is always another expense, another obligation, another reason why this month is different. The wealthy flip this entirely. The moment money hits their account, they pay themselves first. They automatically move money into investments, retirement accounts, savings, whatever their financial plan requires. They treat their future self like the most important bill they have. And then, and only then, do they live on what remains. This one shift in sequence, this simple reordering of priorities, creates wealth almost automatically. Here is where most financial advice falls short. People talk about budgets and spreadsheets and tracking every penny, and sure, those things can help, but they miss the deeper truth. Your financial success is not really about math. It is about psychology. It is about understanding your own behavior, your triggers, your weaknesses, your patterns. The wealthy spend time studying themselves as much as they study markets. They ask hard questions. Why do I feel the need to buy things when I am stressed? Why do I compare myself to others? What am I really seeking when I make impulse purchases? These questions matter because money is emotional. Every spending decision is tied to a feeling, a need, a desire, often one you are not even conscious of. Let me give you a practical example. Someone who grew up poor might spend money freely as an adult because spending represents freedom, proof that they have escaped scarcity. Someone who grew up wealthy might spend recklessly because they never learned the connection between money and effort. Someone who feels insecure might buy status symbols to feel worthy. None of these patterns are about money. They are about identity, fear, and unmet needs. Until you understand your personal money story, the narrative you tell yourself about what money means, you will keep repeating the same financial mistakes no matter how much you earn. The third secret is perhaps the most powerful. Wealth is built through ownership, not labor. Now, let me be clear. Hard work matters, skill matters, dedication matters, but there is a ceiling to how much wealth you can build by trading your time for money. There are only so many hours in a day. There is only so much energy you have. The wealthy understand that true financial freedom comes from owning things that produce value without requiring your constant presence. This could be stocks that pay dividends, rental properties that generate monthly income, a business that operates with or without you, intellectual property that earns royalties. The key is that these assets work while you sleep. They multiply your efforts. They break the direct link between your time and your income. This is the fundamental difference between being rich and being wealthy. Rich means you have a high income. Wealthy means you have assets that generate income. You can be rich and still be trapped. You can be wealthy and be free. A doctor earning $500,000 a year is rich, but if they stop working, the money stops. An investor with a portfolio generating $50,000 a year in passive income is wealthy because that money flows whether they work or not. The goal is not just to make money. The goal is to build a system that makes money for you. Now here is something nobody tells you when you are starting out. The journey to wealth is not a straight line. It is full of setbacks, mistakes, and moments of doubt. You will make bad investments. You will trust the wrong people. You will watch others seem to get ahead faster than you. This is where the fourth secret becomes essential. Patience and consistency beat timing and luck every single time. The wealthy do not try to time the market perfectly. They do not chase hot stocks or jump on trends. They build solid systems and then they stick with them through the ups and downs. They understand that wealth is not a sprint. It is a marathon that most people quit before they even reach the halfway point. Think about it like this. Imagine you are building a wall one brick at a time. Some days you lay 10 bricks. Some days you only lay 2. Some days it rains and you cannot lay any bricks at all. If you focus only on daily progress, you will get discouraged. You will look at your wall and think it is never going to be finished. But if you zoom out and keep showing up day after day, month after month, year after year, eventually you look back and realize you have built something remarkable. That is how wealth works. It accumulates slowly, almost invisibly, until one day you wake up and realize you have financial security. You have options. You have freedom. Let me share a truth that might sting a little. Most people never build wealth because they are not willing to be uncomfortable. They want the results without the sacrifice. They want the freedom without the discipline. They want the compound growth without the years of patient investing. But wealth requires you to do things that feel unnatural. It requires you to save when you want to spend. It requires you to invest when the market feels scary. It requires you to say no to things your friends say yes to. It requires you to be different, to walk a path that most people will never understand. And that isolation That feeling of being out of step with everyone around you, that is actually proof you are doing it right. The fifth and final secret is this: protect your financial privacy. The wealthy rarely discuss their money, their investments, or their strategies in public. Why? Because money attracts opinions, judgments, and often jealousy. The moment people know you have money, they treat you differently. Suddenly, everyone has an investment opportunity for you. Suddenly, family members need loans. Suddenly, friends expect you to pick up the check. Your financial business is your business. You do not owe anyone an explanation for how you spend, save, or invest. The less people know about your financial situation, the more freedom you have to build wealth on your own terms without outside pressure or interference. This does not mean you should never seek advice or learn from others. It means you should be selective about who you trust with financial information. Talk to mentors who have achieved what you want to achieve. Work with professionals who have your best interests at heart. But avoid broadcasting your financial wins or losses to the world. Silence is not about secrecy or shame, it is about focus. It is about removing distractions and protecting your energy so you can stay committed to your long-term plan. Here is what all of this comes down to. Building wealth is simple, but it is not easy. The principles are straightforward. Spend less than you earn. Invest the difference consistently. Let compound growth do the heavy lifting. Avoid debt that does not build assets. Stay patient through market cycles. Protect your financial privacy. These are not complicated concepts. A child could understand them, but living them day after day, year after year, requires something most people do not have. It requires the courage to be different. It requires the discipline to delay gratification. It requires the wisdom to see beyond today and invest in tomorrow. So let me ask you a question. What kind of financial life do you want to build? Do you want to look wealthy or be wealthy? Do you want the appearance of success or the reality of freedom? Do you want to impress people today or secure your future for decades to come? These are not rhetorical questions. Your answers will determine everything. Because here is the final truth. Nobody is coming to save you financially. Not the government, not your employer, not a lottery ticket or inheritance. Your financial future is in your hands right now, today, in this moment. The decisions you make in the next week, the next month, the next year, those decisions will echo for the rest of your life. The wealthy know something that most people never learn. Time is the most valuable asset you have, not money. You can always make more money. You cannot make more time. Every day you wait to start investing is a day you lose forever. Every month you spend more than you earn is a month that pushes freedom further away. The clock is ticking, not to scare you, but to wake you up, to remind you that your financial destiny is being written right now by the choices you make today. So choose wisely, choose deliberately, choose with your future self in mind. Because that future self is depending on the version of you that exists right now to make the right call.